Okay, so you've sent us some really interesting stuff about the market lately, like where it's going, what it's doing,
Yeah.
and well, we're all about, trying to get past the everyday ups and downs, and you want to kind of look at the bigger picture.
Exactly.
And so we're going to do that today with an article from mapsignals.com.
All right.
It's from March 20th, 2025, and the title is Forced ETF Liquidations Are Over.
Yep. That's the one.
So basically, you're wondering, is this like meltdown that the article talks about a chance to buy?
Right. Could this actually be a good thing?
Yeah, is this a buying opportunity? And we're going to look at, money coming out of ETFs
Uh,
and see if that data tells us anything about the market bouncing back.
exactly. And you want those insights fast and clear, right?
Exactly.
So let's get into it.
Let's dive in. And the author kicks things off with this Warren Buffett quote, and it's a good one.
Oh, yeah.
Beware the investment activity that produces applause. The great moves are usually greeted by yawns.
I love that one.
Right. So it's all about like zigging when everyone else is zagging.
Exactly. You got to be willing to take the other side of the crowd,
Right.
and that's often where the real opportunities are.
Right.
And the article really digs into that. The past few weeks have been rough.
Yeah.
Lots of bearish money flows. It was tough to stay positive.
Right. Like a lonely venture.
Yeah, exactly.
Yeah.
And that ties back to what you're saying about wanting different perspectives.
Uh-huh.
Because sometimes the best insights come from challenging the crowd.
Right. So it seems like things might be changing, though.
Well, let's see.
At least according to this data, the article talks about a significant slowdown in risk-off action.
Okay.
And they're seeing their big money index, their BMI, starting to turn upwards.
Right. The BMI, that's their proprietary indicator.
Right. What does that tell us?
So the BMI turning up, that's a big deal.
Okay.
And they specifically say this only happens when capitulation stops.
Okay, so think about capitulation. Like imagine a crowded theater and there's a small fire.
Okay, I'm with you.
So at first, people might try to leave calmly, but then panic sets in and everyone's rushing for the exits.
Oh, I see.
That's capitulation in the market.
Got it.
Everyone's selling no matter the price.
Ah, makes sense.
So the fact that the BMI is going up suggests that panic selling is starting to fade.
Interesting. So the rush for the exits is slowing down.
Exactly. Now, the article has this chart showing the daily ups and downs in the market,
Okay.
and they've highlighted periods that look a lot like what we're seeing now.
I see.
And they say that forced selling vanished during those times.
Okay, so what is forced selling exactly?
Well, it basically means investors are selling not because they think the asset is bad,
Uh-huh.
but because they have to.
Oh, okay, so it's not about their long-term view.
Right. It's about external pressures.
So things like margin calls,
Exactly.
when they need cash quickly?
Right. Or their own investors are pulling out.
Okay, or just wanting to reduce risk fast.
Exactly. And the chart shows these intense periods of money leaving the market coming to an end.
Got it. So the selling pressure eases up.
Right. And this is where ETFs get really interesting.
Yeah, ETFs are huge these days.
Huge. And the author was a former ETF institutional trader.
Oh, wow. So they know the stuff inside and out.
Exactly. And they
Yeah.
really highlight ETF liquidations, calling them a source of near instant liquidity.
Okay, so ETFs are like pre-made baskets of stocks or bonds.
Right.
Instead of buying everything individually, you buy one share of the ETF.
Right. It's like a shortcut.
Exactly. And that's why big players love them.
Uh-huh.
They can quickly buy or sell a whole bunch of assets at once.
Right.
So when the market gets shaky, ETFs become this go-to way to raise cash fast.
And that can really move prices.
Oh, absolutely.
Right.
You have these big institutions all doing the same thing at once.
And the article has another chart, this one specifically about ETF in and outflows.
Okay.
And it looks a lot like the broader stock market picture.
Interesting.
It shows a complete vanishing of red signals, which they say means the end of forced selling in ETFs.
Both the overall market and the ETF-specific data are telling the same story. This intense selling is letting up.
Right. And that strengthens their argument that the big liquidations are probably over, at least for now.
Right. Having that consistency across different data points is really compelling.
Now, they really zoom in on this one day, March 10th, 2025. They call it a nasty liquidation event.
What happened?
Only 6 funds were bought compared to 107 that were sold.
Wow, there's a huge difference.
Yeah, and then they break it down by asset class, and it's like this picture of widespread concern.
So what were people selling?
Well, the 6 funds that were bought were actually bearish equity ETFs.
So bets that the market would keep going down.
Exactly.
Wow. So even in the buying, there was pessimism.
Right, and on the selling side, 89 equity funds were sold,
Okay.
and 83 of those were North American stocks.
So most of the selling was concentrated in North America.
Right, and the author says correlation went to 1.
Correlation went to 1. What does that mean?
So usually different parts of the market move kind of independently.
Yeah.
But when correlation goes to 1, it's like everything's tied together. Oh, I see.
And moving in the same direction, in this case down.
So no place to hide.
Exactly. No matter where you looked, selling pressure.
Wow, March 10th was a rough day.
Yeah, but then just over a week later, March 19th, things look totally different.
Really? How so?
Well, the article highlights that 17 equity funds were bought.
Okay, so money's coming back in.
Right, and here's the key. 0 equity ETFs were sold.
0. So a complete flip from extreme selling to net buying.
Exactly, and no ETF liquidations.
That's a big shift.
And they present this as a really strong sign that money is starting to flow back into the market.
Interesting. So from panic to, well, maybe not quite optimism, but at least less fear.
Right, and that leads to their main point.
Which is?
This pretty clear relationship between extreme ETF capitulation and higher stock prices coming soon after.
So they're saying this isn't just a one-off.
Right, they've looked at historical data.
So what does history tell us?
Well, they found that since 2014, there have only been 54 days where 100 or more ETFs were sold.
54 days and how many years?
Since 2014. Okay, so not very often.
Right. And in the months after those high liquidation days, small cap, mid cap, and large cap indices all did really well.
So across the board.
Yeah.
What kind of gains are we talking about?
Like an average of 8% or more just 3 months later. Double-digit gains within 6 months.
Okay.
And then 20% or more within a year.
Wow, those are some serious returns.
Yeah, those are the kind of numbers that make you pay attention.
Absolutely. So it seems like these periods of intense selling might actually signal a turning point.
Exactly. The market gets oversold and then...
And then what?
Well, think about it. Forced liquidations often happen when fear is at its peak.
Right near the bottom of a downturn.
Exactly. So maybe those forced ETF liquidations aren't just random noise.
Maybe they're a sign that things are about to get better.
Right. One of the best reversion signals, they call it.
So the market's fallen too far too fast, and it's due for a bounce back.
That's the idea, and the article ends with a pretty strong message. They say investors who aren't looking at buying opportunities now could miss out on huge gains when the market recovers.
So they're saying don't wait.
Right. Be greedy when others are fearful.
Right. And they even mention a PRO update with specific oversold opportunities.
Yeah, but we won't go into those specific recommendations here.
Right. We'll stick to the big picture.
So to sum it up for you, listener, this deep dive into the Map Signals article suggests a possible silver lining in all this market turmoil.
Okay.
The data indicates that the intense period of forced ETF liquidations seems to be over.
And history tells us that's often a good sign for future gains.
Right.
It's fascinating how looking at one specific area like ETF flows can give us clues about the whole market.
Exactly. And this deep dive gives you a shortcut to understanding this signal without getting lost in the daily news cycle.
So you can cut through the noise and focus on what matters.
Exactly. And here's something to think about. Given this connection between ETF selling and market recoveries, what could this mean for your investment strategy in the coming months?
Right? How will this impact your decisions?
Because as the author puts it, the market pendulum often swings from pain to gain.
So where might that pendulum be swinging now?
That's the question.
Thanks for joining us for this deep dive. It's been a great discussion.
Really appreciate your insights as always.
My pleasure.
And to all our listeners out there, keep those questions coming and we'll keep diving deep.
Absolutely. Until next time, happy investing, everyone.
Bye.